So welcome you all to this new video. In this video we will discuss about a rising sector, which is a wiring sector. In this sector, the growth which this sector is showing and the profitability growth this sector is showing is fabulous. As you can see that the stock is also moved from here to all around here. As you can see that the PE ratio of the stock is trading at 53 to 54, which is not that easy to gain this amount of P ratio, as it carries a high valuation, also having that market capital of around 80,000. And the second competitor, which is KEI industry, that also showing a very high growth profitability, high growth revenue, and the stock performance is also that good, as you see here in Polycab sector, Polycab stock. So these both stocks are showing fabulous return. As you see that these stocks are involved in the process of making wires and cables in India. Next 10 to 15 years is going to be very huge developmental phase, where very infrastructure sector and other construction sector is going to rise. In the back end, you will see that this wiring sector is also rising. This stock is also having some segment of FMEG product, which is fast moving electronic goods, that also carries some part of the revenue and profitability. And that fast moving electronic goods is also growing at a rate of 14 to 15%. So there are possibility of move further rise in this stock is high, because the possibility of earning and growth in profitability. Accordingly, the PE ratio will go down. Accordingly, the EPS will rise in upcoming years. So why this stock is carrying such high value? What are the key fundamental parametrics, and what are the fundamental analysis of this stock? We are going to all these in this video. So before moving into video, let me give you a quick disclaimer that I'm not a SEBI registered investment advisor or research analyst. The content posted on this platform is purely for educational purposes, and none of it constitutes investing or trading advice. You should do your own research and diligence before investing or acting on the information presented. Now in fundamental analysis, if you will see that there are P ratio of 53, which is around 54, and sector P ratio is 44. So this stock is carrying slightly higher value because of its profitability and revenue growth. And PV ratio is almost around 12, and dividend is not that high, but still 0.38%. Financials and profitability, here it's quarterly normal profitability. As you can see that in recent 8 quarters, the profitability and revenue has significantly increased. Here the significant increase in revenue from 3,000 to 4,000, recent 4,300, and the EBITDA also increased from 440 to 612 in a single quarter. So here net income is also raised from 281 to 399, and EPS also rise from 18 to almost around 26, which is very huge growth in this stock. And if you will see that why the stock has movement has given in share price is very high. As you can see that in annual view, if you will see that the stock growth is fabulous. As you see that from 4,700 to almost 15,000, which is 3x return in just the span of 8 to 9 years. And the EBITDA also increased 446 to 2,200. Can you imagine? Almost around 5 times in the recent 8 years. So accordingly the stock has given very huge return. And if you will see that EPS also increased from 11 to here 96, which is showing a robust growth. And the company is also accordingly growth too. Its dividend is also increasing from 1 to consistently it's increasing around 20, and accordingly in near term it also pay very high dividend, as dividend pay ratio is also low, so it's not paying that much. As accordingly, as you see that the stock is trading around 5,000, which is paying 20 rupees dividend. So the dividend is not that high, but still the stock growth is fabulous in the recent years. Now if we will see that peer comparison, the stock has carrying a high P of 61. On the other hand, the Havels, which is another big competitor, is carrying 80, and 7 figure is 71. PB ratio is not that high. So this stocks sector, this segment which I said is very growing. So the expectation of investor in this sector is very high. As you see that PE of all the stock is trading very high, and the dividend is also not that high. As you see that all these companies are trading this as the stocks are being picked up by direct institutional investor DII and foreign institutional investor FIII, which gives stock upward pressure in this near term, as retailers are not selling that much. So that is why stock becomes very expensive in this near term. As I said that whenever a stock from a small cap to mid cap and mid cap to large cap goes, the FII and DII started picking those stocks, and accordingly the stock moves very upward moment, and the P ratio also rises. To make your own analysis and research before investing or acting on this video. Thank you. See you in next video.